What's up, traders? Anthony Crudele here, and welcome to this week's episode of Develop Your Edge. In today's show, we have my great friend and great trader on, Matt Pax Kenna. Pax is going to share with us what his edge is in trading. And in my final thoughts, a lot of what I talked about last week, how I'm using market correlations between HYG and the E-Mini S&P. But before we get Pax on the line, let me take you over to my screen here where I have activetrader.cmegroup.com up. Great resource for all levels of traders. And today specifically, I want to talk about the products that you see here. Now I'm going to click on the E-Mini S&P 500. That's my favorite product I'm pretty familiar with. And it gives you a great product overview. You have a video here, a lot of information on the E-Mini S&P 500. At the bottom, you have a chart of it, and you have contract specifications. I always say before you trade a product, learn the basics about that product. So activetrader.cmegroup.com, great resource for all levels of traders. All right, everybody, let's get Pax on the line. Pax, what's up, my friend? Welcome to the show.
Thank you, Anthony. It's good to be back.
It's great to have you. Before we get started today, I have to ask you about that picture. And behind you to the left, it's got the gold coats, the red coats. Who made that picture for you, and what's the story behind that one?
Some artist made it, but my wife and I, Jen and I, were at an art fair in the city and just kind of walking around, and I made note of it. My wife had worked on the trading floor for 18 years as a clerk for various brokers and traders, and I made note of that. Look at how beautiful! That's very cool. So unbeknownst to me, I went and got a Coke or something, and she went and ordered it, and I got that. That was my Christmas present a few years back.
Oh, that's very cool. Well, you and I have had a lot of conversations, a million on the phone, but we've had a couple on the podcast and on other shows. And we've talked a ton about your strategy, your process, but we haven't really talked a ton about your edge. What do you believe is your edge as a trader?
Anthony, it's a hard question to answer in many ways, but my edge is over the years. The two things that I think that I've struggled the most with, and that I've had to come to grips with, is I need to keep my trading simple. I'm trading futures. I'm not trading options. I'm not trading complicated option spreads. I'm not trading complicated calendar spreads or anything like that. I primarily trade the indices, S&P 500 and NASDAQ. So I need to keep my trading simple. I don't have my charts aren't marked up with very many levels or indicators, or I've got my targets. I write out my plan every morning in paragraph form. I write them out every night, and I adjust them in the morning before the market opens, depending on the overnight action. And so I keep it simple. That's very important. And I think the second, and this is more complicated, and this is where experience comes in, is over the years I've had to learn how to increase my size, decrease my size, and when to stop trading, and to remember that to not have anything on at all is a trading decision, and to be okay with it.
So ultimately, you believe your edge is you.
Yes.
You
Absolutely.
and your experience. So I talk a lot about statistical edge and mental edge. I believe that traders really need to have both, but you really got to have one that really is your leading edge, we'll call it.
Mm-hmm.
Since you said that your edge is you, I'm assuming a vast majority of what you would consider your edge is mental edge. But what percentage, talk to us about, is statistical versus mental?
Oh, look, we all need to have a real good method of trading. I need to know that my method of trading is going to work. I need to know that the statistics back it up. But frankly, I know that 95% of traders, I forget what the real number is, but most traders would lose money if they had the high and the low of the quarter. They would still lose money. I remember hearing that a long, long time ago, and you and I have discussed this many times. I've had this conversation with a lot of other traders. So ultimately, having the high and the low of a quarter in the S&P, my gosh, remember the old adage on the floor, a peek in the deck is worth 1,000 charts. Yet having that knowledge, most traders would still lose money. So still, even with my statistics being leaning way more in favor of a profitable trading outcome at the end of the day, and especially at the end of the week, unless unless my life is balanced and my plan is also balanced, then my trading won't be. My trading will not be profitable. So I'm going to still go back to, I think that I really do believe that the majority of my profitability depends on my being consistent, which depends again on me recognizing and realizing that I need to stay within my lane and I need a set of guidelines and rules that are going to help me stay there and keep my trading simple. It all goes back to the same thing.
Yeah, and shout out to Andrew Strassman. He's the one who told me about that, where he said if somebody had the high and the low, and there was a percentage of people that would probably still lose money.
Mhm.
And getting back to you and your edge, I think a lot of the traders out there listening are probably saying, "Well, how do I develop my edge for myself, like Pax?" Walk us through how you got to the point of recognizing that it wasn't going to be a strategy, it was going to be you, and your process for developing your edge.
Now, I don't want to give anybody the a false indication that I don't have a a trading process, because I do. Um, I, on the trading floor, it was much more forgiving. We had so many things that went into trading that I mean, I had my method of trading on the floor, and I had to learn. Eventually, I had to learn how to translate that into or onto the screens. That took a while to sit and work through. I had to learn how to manage my positions. I had to learn how to I trade the opening range trade. I am long above and I'm short below. I already have my plan written out every morning. So when price breaks out of the opening range, for example, today the bottom of the opening range was 31.37. Below the opening range, I know that once the market gets to 31.21, I'm going to be taking profit. 31.10, I'll be taking more. Down to 30.73, same thing. So I've got these preconceived prices on the downside and up on the upside. I know what I'll do when the market gets. I know what I'll do when the market gets there. And if I miss the trade, that's the important part. If I miss it, I'm okay with it because I know that I'll catch it. I'm not going to try to initiate risk at a spot that I should not be trying to, because I'm going to wind up getting too chopped out. I'm going to wind up giving back too much money to the market that I really don't want to do. So that's part of not doing anything. Now, on the other hand, I don't want to give the false idea, the false notion that I don't have a defined set of rules and set of guidelines that I trade. And I don't want to give the false notion that I don't use technicals and I don't use fundamentals, because I do. I'm constantly reading. And at night, when I sit down to do my homework, I am poring over charts and I am doing the work that I need to do to come up with the best targets for the next day's trade. But none of that will matter. None of it will matter unless I wake up in the morning, and frankly, I say this all the time, unless I wake up in the morning and I make my bed. That's the first thing I do every day. It's important. And then I've got a routine. I've got habits that I go through every day so that I can check in with myself before the open of the market. And I've got it's something. It's kind of corny, but it's a little checklist that I've got in my notebook. CCFF. Am I confident? Am I carefree? Am I fearless? Am I focused? If I am not confident, I don't need to be trading, or maybe I need to cut size. And confidence means a lot of things. Maybe, or carefree. Am I worried about my health or somebody else's health? Am I worried about something going on peripherally, something going on in the world, right? Maybe I cut my size. Am I fearless? For a long time, when I was starting back the second phase of my career after I met Global Field and full time on the screens, I had to figure out how to manage my positions most effectively, so as to not take profit, to not try to take too much out of the market without taking a little bit of profit, and also to leave something on, to take more profit out as the market extends, and also to leave a runaround so that I can build a position. So that all goes into my fearless and my focus part. Because am I worried about making money? Do I have to pay my bills like I had to in the beginning, through my trading like I had to at the beginning of the second phase of my career? Because if I do, then I'm going to be trading with fear. If I'm trading with fear, I'm losing money. If I'm worried about making money, I'm in trouble. I need to be confident. I need to be carefree. I need to be fearless, and I need to be focused. If I'm not, that's the first morning evaluation that I need to go through. Then I know whether do I trade my normal unit size or maybe do I cut my size in half. And of course I take into account now, where's the market, the technicals, where's the market,
Yep.
do I like this area, that kind of thing. And, that goes also into it too. But I hear lots of traders, Anthony, talking about and it's important. I don't mean to minimize, the technicals and the fundamentals and, I don't mean to minimize that, but I really don't hear enough. I don't hear too many traders talking about the mindset and what we need to go through in order to control our emotions so that our emotions don't control us. So that, I trade my plan. If I don't trade my plan, I'm going to be trading randomly. Again, it goes back to being CCFF. And I know it sounds corny, but for me, it works.
No, I like it. I love CCFF. I'll remember that. And we only have a minute left, Pax. And one thing I want to say is I totally agree with you. Self-awareness, situational awareness. Everybody knows I talk about this a lot. And I want to talk about really what you're seeing maybe right now in the markets to maybe give you an edge. Last week on the show, I
Oh,
talked about how I was looking at HYG and I'm looking at it on my indicator versus the S&P. And sometimes we find these things and we're just like,
yeah.
I'm going to lean on that. That's just something I'm seeing right now. And it'll work until it doesn't. What are you seeing right now in the markets that maybe is giving you a little bit of edge in your trading?
Well, I use the opening ranges. So now I use a daily opening range, which we defined on the trading floor as the first 30 seconds in the NASDAQ. So I still use that to give me an idea of where to be long, where to be short. But ultimately, right now, and you and I had this conversation just between the two of us last week. I was talking to a bunch of traders this morning. So much bad news out there. Oh my gosh, COVID is picking up. Second wave. Our country is in a transition phase of sorts, and so many things going on. Presidential election, and all that entails. Not to mention everything going on in Europe, negative rates, lower bound zero, all of these, everything going on with the Fed here in the United States. Yet all this bad news is again kind of negated, I think, by the $5 trillion of capital floating. We've got record cash reserves by investment grade corporations. We've got right now near record reserves with the cash reserves for the U.S. Treasury. What are they going to do with that money with the Fed as the backstop behind it all? We had that conversation, and that's not my bailiwick. I'm not a fundamental trader. I leave that to Ira Harris for me, and I bounce ideas off of him. Ultimately, I'm looking at 32.31, which is the S&P settlement for 2019. That's the biggest opening range of the year for me, where we closed out 19 and opened up 2020. So 32.31, I'm going to be short. I'm going to be looking to trade short below that, but based off of every day's opening ranges, I see price moving like a ladder, one rung to the next, to the next, and to the next. So I keep it simple. I'm going to let the market tell me everything else. I'm not in the business of predicting the market. If I was, believe me, I'd be driving Uber full time. Not that there's anything wrong with it. I did it in the beginning part of the second phase of my career. But I'm going to let price action dictate what my positions are. I'm short today from the opening range. If we close down near where we are, I'll take those shorts home with me. That's how I adjust the way that I manage my positions. But I'm cognizant of the fact that every time we seem to have a sharp sell-off in the equity markets, it stops on a dime and reverses without any real explanation fundamentally or technically,
Yep.
because there's so much cash reserves just piling into the market.
Well, Pax, we have to leave it there, my friend. It's always great to speak with you.
Great talking to you.
And I want to wish you a very happy Father's Day this weekend. And to all the fathers out there listening, especially to my dad, love you, Pops. So thank you again, Pax, for joining me on Develop Your Edge.
Thank you, Anthony. Thank you very much. And happy Father's Day to all the traders out there. Thank you, guys.
Hang tight, traders. We'll be back with my final thoughts in 30 seconds.
24/7 access to diverse global markets. Right here.
That's why I added stock index futures to my trading strategy. Now when I see ups and downs coming, I'm ready.
Well played.
Why trade with TradeStation? It's innovative, easy to use, and totally freaking sweet. With powerful tools to track and execute your trades and low per trade commissions on stocks, futures, and options. Upgrade your trade at TradeStation.com.
And my final thoughts today, traders. First, I want to give a shout out to Pax. Absolutely love my conversation with him and how Pax explained how he is his edge in trading. Now, I want to go to the charts. Remember, traders, last week I talked about how I'm comparing apples to apples when I'm using market correlations. So I pulled up the E-Mini S&P daily again on TradeStation, and I'm going to talk to you about a lot of what I talked to you about last week. I said how this 3006 level, the orange level here, was key for me to be watching. And if we close below it on a daily, I wanted to see if HYG would close below that same level. If that happened, then I would start to get more bearish the S&P. But the S&P actually closed below it and then came right back above it. And I said if we get a close above it, we could look to test 3154, especially if HYG is holding above their orange level. Now, before I pull up HYG, I want to talk about where I think we are currently in the E-Mini S&P going forward. I just think we're boxed in right now. I talked about this last week saying when the Bollinger Bands are pointing in, I think it's a two-way trade. For me, key pivots above are 3154. That's my 30% line. I've explained this in other videos, and you can download my indicator for free on anthonycrudele.com. And this 3006 level, I think that's just really our range right now. And until I see daily closes above or below it with confirmation from HYG, I think we're rangy. Now, let's pull up HYG because I want to talk about this. This was really important for me this week. So remember I just said, if S&P was going to close below 3006, I want to watch HYG and their orange at 8167. This day was extremely important to me in HYG. You can look it up. The low is 8172. And the fact that it came up just shy of 8167 and went up, when I saw that selling pressure come in the S&P, I said, I can't participate in the short side. I have to wait to see what HYG does on the open. It held above it, and then all of a sudden the S&P started walking back up. And look at where we went up top this week. 8403 was the pink level in HYG. We got back below it. S&P started to pull back. Sometimes traders, we could find these markets that are working really good on these correlations, and we could find little edges here and there. So that's what I'm looking at in HYG versus E-Mini S&P. Now remember, traders, if you have any questions or comments, please put them down below here in YouTube. And remember, you could follow me on Twitter at Anthony Crudele. And I've mentioned I'm doing a lot more stories on Instagram, so you could follow me there at Anthony C. Crudele. Once again, I want to wish all the fathers out there a very happy Father's Day. That's a wrap for today. See you next week.